So today we're going to take a look at the Seller Financing Addendum. People have been asking about how to fill this out and if you need to put anything else with it kind of to share. So we're going to go over this, kind of walk through. I remember in the 1 to 4, one of the areas it says if you do seller financing, that's now a spot to check in the 1 to 4, and this addendum is now required if you do seller financing in the 1 to 4. So what that is, this is the form. Now for the channel, if you're not liked and subscribed, please do. I'm Andrew Morin, real estate trainer and coach here, real estate broker. We're going to go over again. I'm not your broker. I'm not a lawyer. I'm just going to go over this the best I can. I'm not perfect. If there's any mistakes, let me know. If you see anything to increase or explain different, had a couple great comments on the videos already to improve for future videos. I really do appreciate your feedback. Please like and subscribe. Talk to you soon. Let's rock. So again, seller financing addendum. Here will be the address of the property you're going to do seller financing on. Make sure, again, if your client needs to make sure that they're doing, talk to a lawyer if they want to, that we're not, as real estate brokers and agents, cannot give legal advice. Remember that. So first part, credit, credit documentation. So what this says, to show that the buyer is able to buy the property, you have so many days. You could do like 5 days here or whatever. And then you could, after the effective date of this contract, so within that many days, you can say what you want given. You can do multiple, as you can see. You can just do one. I'd recommend, of course, doing a credit report, verification, salary, current financial statements like bank statements, and anything else you might want to see. This lets the seller know that the buyer can afford to make the payments and they have a job. That way, again, you're not going to a traditional buyer. So as long as they're comfortable, they're going to have to give up this information or as much as they want to the seller to let them know that they can pay for it. And then again, if this is not delivered in a specific time, seller may terminate, et cetera, et cetera. This pretty much says this would be like the part 2 of the third party finance, but this is here now. This is it. So the buyer, again, it's all on the seller. The seller can terminate, like it says, to buyer within 7 days after the time for delivery, which is later, and the earnest money will be refunded to the buyer. And if the seller does not terminate after getting this, then it's deemed that the buyer is approved. Now, this is the next part. That's another important part. It's a promissory note. So let's say the home is $300,000. Should have enough zeros. Yep, $300,000. So this would be, of course, in the 1 to 4 contract, you'd have that amount, and then bear at the interest rate of, let's say it's an 8% interest rate. And again, buyer, there's no prepayment penalty like it says. Any premium, it says blah, 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 all that. I mean, buyer may prepay the whole, any part. Any prepayments are to be applied to the payment of the installations of principal, and interest will immediately cease on the prepaid principal. So if you pay extra, you're paying the principal, not the interest. So remember that a lot of banks and places, when you pay extra, they take it right out of the interest first. This is saying here, you're paying principal first. So like it says, this is how you're going to pay. So the first box would say, what's due in one payment due, let's say, again, 5 days after the note with maturity, at monthly. And then right here, interest, interest payable at monthly. Most people do monthly. And then monthly installments, how much, etc. A lot of people are going to say, I don't know what to put in there. How much is it going to cost? I don't know the amount. What should I put? So I just this was something simple. I just built in Claude an amortization table. It's right. You can do it in Excel. So again, 300,000, we said 8% interest for 30 years, and it starts on September 1st. So it pretty much breaks it down for you. Here's your monthly interest, number of payments, monthly payment for principal and interest. Notice this does not include taxes or anything else. This is only the principal and interest. And then after those 30 years, when you buy the home, you're going to be paying this much in interest, this much in principal, and that's the full amount. And then you'll be paid off totally in 2056. And then if you're going to see all this extra, now if you put an extra payment in here, say I paid $500 extra, you can see it automatically adjust for the rest of the payments. And then you can go through and look at that and kind of check it out. So this is an easy thing to put together and have your client look at. Lets them know, see, you can see the whole 30 years is broken down, shows you how much is interest you paid, how much principal, what your ending balance is, And as you can see in the beginning, you're mostly paying interest, and then the payments will slowly start shifting. And then at the end, you're paid off, and then you're only paying interest and principal, et cetera, et cetera. See, 385, and you're done. This is an easy way to keep track of everything, keep it flowing, not having to worry about it. Just put this together, okay? So again, this is just an example. Put your own numbers in here. So now I know this would be 2201. So I come back here, installment interest of 2201. So is this including interest? And then no, I don't have any interest in there. Well, it does include interest in this one, I guess. And check, and then it would be, beginning, let's say, again, 5 days, just to keep it simple. And it's going to be for 360 months, 30 years. And then the balance is paid. Now, you don't have to do it. And then see, or you could pay interest only. This is regular installments, and this is interest only. Depends how you want to do it. Now, the deed of trust, this will show, the property transfer. Right here, you have consent not required, which means the property be sold or leased without the consent of the seller, provided you pay your monthly payments. The other option is you have to have consent. So, because again, you're seller financing, you own the home, but you're still paying it. The bank is your seller, or your seller is your bank, whichever way you want to look at it. So this is something else you can look at, that before you change anything, you have to get permission from the seller to be able to rent it, prop it. Some people get these good deals, seller financing, they get something decent, put some money down, they're good to go. Then they flip it with an Airbnb or something like that. That's fine to do as long as you're in this box here. This box, you have to get permission to do that. Now, again, you have to make sure that the buyer shall not obtain insurance, which I recommend doing that to protect your seller. And then tax, so escrow required, or is the buyer going to furnish the seller before each year all the taxes? Most people who are doing it are going to want everything together like a regular PMI instead of principal interest. You want PITI, I apologize, about PITI, principal interest, taxes, and insurance all together, not just principal and interest. So this second box here is if you had that just like a regular loan. And then you can have a third-party financing. A title company can help you find a good person that's reputable that does that. There's companies out there that do that. And again, you just hit yes, the escrow account will be serviced by a third-party financing, and usually the buyer is the one who's going to pay for that service. And then any default under any liens will be default under the deeds of trust securing the note. So you got to make sure that any liens, everyone knows there's a lien on the property and who's going to pay it and take care of it. And then buyer and seller sign. So this sets up the description, and it makes it really easy after describing what's happening, where to go, and how to do it. Keeps it simple that way so everyone knows what's happening, where they're going, and understanding the whole process if you're doing seller financing. Again, have this Excel sheet that helps, and I'll show you real quick on the 1 to 4 where to go through and grab it. So if you were in the 1 to 4, let me just grab back into mine real quick. And here's the 1 to 4. I'm just in zip forms. So right here, see, it was 300,000. This is 310, but anyway, seller financing addendum. This is where you would check if you needed that, if it was seller financing. That way you can be set up and be ready to go. Hope that helps. Talk to you in the next one.